One thing we all have in common, that is making you lose money. Alright, so today I want to talk about the number one reason you are losing money trading the stock market. Alright, if you can't get your emotions in check, you will lose money every single time. Alright, every single time. I don't care how good you are. If you do not have your emotions in check, you're going to lose money. Everyone is different, so you're going to experience something different than what I experienced, than what the next person experiences. So if you don't get those in check, like I said, you're going to lose money every single time. I'm going to go over a few of them, and I'm going to share with you my experience, which one of these emotions I struggle with. It's a constant battle with that emotion. Depending on who you are, will depend on what what emotion you battle with. And mine is greed. I'm going to tell you up front. Mine is greed, and I had to really figure out what works for me to fight that off. But it's not something I'm like, okay, I figured it out once and now I'm over it. No, it's a constant thing that comes up for me, and I have to keep myself in check. If I don't, the market's going to put me in check. You're going to run into the same thing. So this is something that you might be running into if you're constantly losing money or not seeing any progress. If you're hanging on to a trade that's losing money, then you're probably battling fear. If you find that as a common thing for you, you buy a stock and then it's losing money and it's losing money and it's losing money. You're battling actually two emotions there, fear and probably hope. Because the more it goes down, you're like, oh, it's got to turn back around, right? Right? It's gonna turn back around. I hope it turns back around, right? So at first you're battling fear and you're like, oh, I don't know if I should get out. Should I hang on to it? And then eventually that turns into hope. And you're like, well, I really hope it goes back up because I'm losing even more money, right? That will have you losing more money than what you should. Stock is an employee. If it's not doing its job, you need to get rid of it. Now, what its job is, you need to figure out before you buy the stock. If you go to work every day this week and you don't do your job, like I runs New York, I know you do some film or some video shoots or something like that. But if you showed up every day without your camera, they're going to let you come back? They're like, we need to find somebody else because he's not showing up doing his job, right? Well, the same thing with your stock. You don't want to let it, stick around if it's not doing its job. Exiting a losing trade too soon, then you're battling fear. If you buy stock and it starts to lose a little bit of money and you're like, okay, I'm down $20, I'm out. I had a student who was, every time it showed a negative, I'm out. He was just scared of losing money. And I get it. I know you're scared. But a tip here is for all of these emotions, the tip is always going to be to have a solid trading plan, okay? Exiting a winning trade too soon. You might think, oh my gosh, it's going up. This is too good to be true. And you sell too soon and you miss money. But also be in a trade and it's making money and you're just still hanging on. Well, then you might run into the stock turning against you or going back down, because you've hung on too long and you've become greedy. I have bought a stock for trading purposes and was like, oh, I'm up $1,000. I'm going to try to make 500 more, right? And the stock market was like Debo and said, no ma'am, give me your chain. And it just took all my money because I didn't stick to my trading plan that I had in place. I knew when I made $1,000, I was supposed to be out. But I had made that $1,000 and stayed in thinking I was going to make some more. And yeah, no. Not gonna happen. So it's important to have that trading plan and know what your entry point is, what your exit point. Like, is it when I made $1,000 or when I made $200? Whatever the case may be, if you're trading, stick to that. If you're long-term investing, you need to determine, am I planning on hanging on to this for a couple of years? Is this a years to decade, lifetime type of hold? That's the things that you need to consider. And stick to that trading plan. You're still evaluating as you go to make sure the trade, the stock, the employee is still doing its job. And then if it gets to the point where it's not doing its job, then you can reevaluate. If maybe the market conditions change, then you can reevaluate your plan. But by starting with that plan and having that as a basis that you go by, you can make sure that your fear, your greed, and hope isn't coming into play and making you jump out of trades too soon. Using too much money on a trade. Stick to same dollar amounts every single time. So if you decide you're going to buy $200 worth, it's $200 every single time. $200, $200. That's it. Your wins will outweigh your losses if you're buying same dollar amounts and sticking to a loss limit. Meaning if you lose a certain amount, you're going to get out. Okay. But by sticking to that same dollar amount and a loss limit, you can offset your losses with your wins or with your gains. Okay. If you have been trading $200 and you're like, I'm freaking good at this, and you decide you're going to trade $1,000, the loss on that $1,000 is going to like wipe out what you've made with those $200 over the last few times. Okay. So by sticking to the same dollar amount every single time you trade, you can help offset those. Entering a trade before it matches your entry criteria. You know, buying a certain time of year, buying when it looks a certain way, when the chart looks a certain way or the stock is a certain price. There's certain criteria that you need to follow or have in your trading plan. And when the stock matches that criteria, that's your buy. That's your signal to buy. Okay. But anytime you do outside of that, you're going to get in it and you're going to buy that stock and you're going to feel like something's not right. So your trading plan is kind of like your blankie. You know, it's like your warm, like your comfort zone. So like your parachute, like what do I do when something happens? Like, you know, okay, let me pull this parachute. Let me get out my trading plan and figure out, okay, what am I supposed to do when this happens? What am I supposed to do when that happens? Okay, I'm supposed to sit my ass down somewhere and it's going to be all right. Okay, I know what to do right now. You know, it's a way to help you keep yourself in check. You're risking more than you usually do to make up for a loss. So if you've bought a stock and it's losing, but you add more money onto a trade because it's losing and you think, well, I'm buying more and it's cheaper, so, and it's got to go back up. Not necessarily. Buying more of a crap stock, it's just more crap. Okay, it's not gonna do you any good in the long run. So don't buy more of crap. Okay, these are all emotions. There's fear, there's greed, there's hope, there's boredom. Like, don't be bored and sitting there like, I just feel like I have to trade today. You will end up losing even more money.